Hey, when you die, what do you think the last part of you to die is?
Yikes. Wow.
Your toes or something? I mean, like, you don't die all at once, do you? Like, what's the last part to die?
Your brain. No.
I think it's the pupils. Because they always dilate. Come on, man. Come on, that's a dad joke right there. You love it. No? All right. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. I've been saving that one all day. I've been saving it all day. I was excited about that. Welcome to our show. We're financial advisors, and our personalities don't always show that. I like to talk normal. You know, I spent years in corporate world having to give the big words, and occasionally one slips out, but I like to talk real simple. Just go through everything. I'm not trying to make anybody sound like they don't know what they're talking about, but why do we got to make it so hard? Let's just talk about how this works. And so we're going to cover the stock market here today, as we always do. I appreciate you guys hanging out with us. Tomorrow, our Wine and Wealth class, which is a little bit more focused on our clients here. Thursday nights in the speakeasy over there, we will be going through your New Year checklist. This is going to be the most detailed thing I've ever put out as far as like the planning side of it. It occurs to me that this is going to be the year that we're going to have to focus on a lot more than just the investments now. We need to bring some value in other ways. So that'll be tomorrow. I'll have that all ready, and we actually got a cool little way that we're going to be posting it for our clients so they can have access to it. And of course, if something comes up, we need to talk about it. Happy to help you there. We're also going to be starting a segment live in our research site, trading. So we're working on putting all that together, where the trading side of things, just the fun day-to-day stuff that we do, just a nice little fun segment. We can kind of show you what we're doing and teach it at the same time there, as we like to do on the research site there. So more to come. But as the stock market falls today, Fed put a stop to that pretty quick. The Fed minutes came out, and there was what was their words? The discussion of policy normalization considerations was exactly what everybody decided to focus on, at least all the blogs and the financial media and stuff. Basically what's happening is the Fed was signaling that they do like the idea of speeding up their asset purchases, maybe faster than expected, because their balance sheet is so ridiculous. And they also claim that strong economy, you got high inflation, you got strong labor market, or what they call a tight labor market. And so that this is warranted, that they could start backing off all of it. I think it's good. We do have a tighter labor market, very tight down here in Florida anyways. We do have inflation. That's been proven there. And supposedly we have a really strong economy, right? So however you want to look at it, I think it's a good thing. The Fed should be tightening up, and I like the fact that they're tightening up a little bit faster. There is more money sloshing around out there. And I talk to people all over the country every single day, all over the world now. And there's money everywhere, right? The access to money is there, and it's about time to just put that. Let's just go ahead and stop that. Everybody get back to work, and let's call it a life. Let's take a look, because a lot of action here today. The Nasdaq was hit the hardest, which has been the case over the past couple days there. This news was what affected that. The growth stocks, of course, that we've seen already take their hits, now coming even more into reality. So more of that. The slow and steady growers, right? Those kind of the boring names. That's where all the excitement was. Mondelez hits new highs today. Everybody's moving towards the, I don't need the high-flying stock. I want the stable stocks that just grow, right? Those long-term growing that pay the dividends. You got 35 cents a quarter here for Mondelez. Hits new highs. These guys make Oreos. We're going to buy Oreos whether the Fed tightens or not. At least I am. And I'm no joke. My wife sent me a pic. I'm not kidding. Check this out. I don't like to spend time on personal stuff, I guess, if it's not that interesting. My wife sends me a text. FYI, won't be making dinner tonight. No readily available meals in the house. Please plan accordingly. And she takes this picture. She goes, but don't worry. I found leftover Oreos from the holidays, so maybe that'll work. I'm not kidding. That was actually what happened. So that's what's going on in the stock market here today. And actually, look at some of the other ones. Your T-Mobile, otherwise weak. There you go. Honeywell, how often do you look at Honeywell, right? So that was some of the excitement today in the Nasdaq. That's what's going on all across the board, no matter what index you're looking at there. We'll go to the S&P next. The excitement is moving away from the your Etsy's, and we'll go through some of it here, and moving into the slow and steadies. Your Merck, right? Well, who wants to invest in Merck? Nucor. I actually like Nucor a lot, but moving in there. AT&T continuing to come off the lows there. Pfizer, which is kind of always in the news. Smuckers, for God's sakes. They make jelly, and they have other brands too, but Smuckers. People want to go to the boring stuff, and they're less interested in the metaverse and all this VR stuff. There you go. Now, I'll point out that the S&P did hold up most of the day until those Fed minutes came out there. And actually, a fun fact for you, prior to today, the S&P had more than 1/4 of the S&P, 170-something stocks, were averaging, so far this year, a 1% a day gain, right? You think that pace was going to keep up through the entire year? It's not something that's going to happen there, and it's not sustainable. So understandable there. We got a little bit of a pullback, and I hope it turns into more myself. You could tell I'm a little more excited. But like we talked about yesterday, end phase, right? Stocks that have more focus on debt, that have more rapid growth rates but slower total earnings rates. Those are all the ones that got affected today. You got Salesforce.com, big decline there. Paycom, which has already been declining as well. Adobe was a big one. Actually took a position on Adobe. I sold 510 puts there, and I'm looking to add the calls to make it a sort of a legged-in strangle as we get going. But so that's that one. Anyways, just pointing that out. And that's basically the theme of today without just rambling on and on about all kinds of other stuff. Now, you notice the shift that started yesterday, right? So you notice that the money was moving from, Snowflake, Etsy, we pointed out there, and it was moving into IBM of all places there. Today, if you take a look inside, that continued, right? So money moving more, I don't want to call it safety, but more traditional investments there. Intel was one of them. 1.3% gain on the day. Walmart, another one. Same thing, actually, the exact same gain on the day. Stocks that you might favor a Costco or a Target or something if you have been more excited, but that's not the case, right? IBM actually up, and it's extended too, by the way. You got money moving away, like I said, from Etsy. Oh, no. Let's see. There we go. Like we've seen that there. Continues to sell off there. Shopify. So Shopify selling off there. Actually sold the 1180, 1170 put spread on that one just kind of later in the day. I just happened to see it and look at it. But, a lot of these things like Snowflake, could have done something there. Back to the 200-day moving average. A little oversold in the short term, but people are focused on that because of rates, right? Here are your, we'll look at bonds actually. So we look at bonds, that's a sharp move, right? And we know, from watching that as the price moves lower, yields are moving higher. I think the 10-year touched 1.7 and change, somewhere in there today. And that's a really sharp move over the last 3 days. So I looked at that and said, well, okay, let's see. We got the TLT, rather sharp move for the TLT. And I said, well, I'm going to sell the 139 puts. So I don't remember. I looked at the 139 puts, and I'm like, all right, let's just go with that just to have something in there. But why would I do that? Well, we'll use the research site real quick just for you. So what I did, if I can get it where you can see it, I might have to refresh this page, but check it out. This is all I did. If you're a research member, you can do the same thing. I said, how often has the TLT lost more than 3%? Oops, there you go. Lost more than 3% in 3 days. And I think I just went 20 years because that's about as far. You can go a little further back for the TLT. It's been around about that much. And so let's try to shrink it in here, make it look good for you so you can see. Off to the right. It's all right. This happens 83 times last 20 years. Forward stats, which is just going to be the next 3 days. Basically flat, not much movement there at all. And I said, well, I'm going to have this for like 40 days, right? Maybe even longer. So the new feature down here sent this to the forward lookup, and I said, well, I'm not interested in the long term, so let me get rid of 1 year, 6 months. Let's get rid of 3 months. I'm going to change this sucker to 45 days because we can. And then we'll go to, we don't need 1 day. Let's just we'll do a week and a day. Why not? So taking a look at this, just trying to see if you put a position on what's best and worst case scenarios there. So doing the forward search, in other words, taking all of this data over here that we just pulled and looking forward to see the actual performance going forward. And of course, is Charlie messing with this thing? I got to tell him not to mess with this at this time of day. I'll give it a second. So going forward, I found that, hey, the performance is the same, right? There's basically nothing changing there. So if you look at TLT, There you go. If you sold the 139 puts, you have room for further decline there. It's not normal that it's going to keep declining at that pace. You have a recipe for a position that's likely just going to be bouncing around a little bit sideways there. And so that's why I put that position on. Now, how it affects everything else, if you're looking at rates falling rather quickly, and he is messing with it. Okay, so that's a boon for banks, right? Maybe not today, but it's something you want to look at for your banks that just recently broke downtrends and maybe pulling back for you here in the short term. The broad market can have these sell-off days where everything just goes lower because the index funds, the mutual funds that are index-based, all are doing broad selling, and that's going to put a pressure on a lot of the banks because they tend to be a higher allocation to index fund ETFs and things like that. They should be. So anyways, the XLF, which currently has the cheapest valuation relative to every single sector in the market, right? It's at like its 35th, 39th percentile in terms of how its valuation relative to the other sectors. So you look at that and you say, okay, great. Any pullback is actually exciting for financials here. And so that was one of the sectors that pulled back today. And by the way, every other sector pulled back today. So I'm not trying to highlight this in any way. Just saying, yeah, that's something you can look at. And in second place, year to date, by the way, energy. Think about this. You've got energy up until, well, actually still, as of today, it's averaging 2% a day, right? Since the start of the year. I mean, it's not many days, but it's averaging 2% a day so far this year. Do you think that pace continues? Is there any time in history where that pace continued? Nope. I can already tell you. You don't have to look it up. I can tell you there's no chance that that's actually happened. So a couple things to look at, right? So I just wanted to point those things out as you go. Energy was would have been the second best performer, although it finished down on the day. Materials was the first. So I know I'm kind of bouncing around, but I wanted to share that stuff with you there. All right, and the biggest thing for looking at the markets in general is the transition of money at the moment. I think I've got something for you. If I could just go over here, pop this in here, let's take a look at this. We were talking about measuring stocks against some metric, some fundamental analysis technique, whatever you want to do, right? We took the entire market, and we took the top 1,000 stocks actually by market cap. So the 1,000 biggest stocks there, broke them into 10 groups here, and we said, okay, yesterday, how did they perform by the following metric? We wanted to know from the lowest earnings per share to the highest earnings per share, right? We wanted to see how those stocks perform. So the higher, faster earners right now performed much poorly, average of 2.82%. At least the top 100 stocks did that. And you can see where all the weakness was. So it's exactly what we were saying yesterday, just now visual for you to see. You take it a step further and you say, how about revenue growth? Because revenue growth, we've got a lot of people that are focused on growth at all costs, as they used to say, growth at all costs. How did they perform, right? We know that that's very debt-ridden companies. They're interested in taking on more debt. Well, there you go. They were the ones that performed the worst yesterday as well. And so that just gives you a visual picture of the broad market. Everybody's moving away from high-flying, fast tech growth type stocks like that, moving into more traditional, slow revenue growth, right? The slow and steady guys, your consumer staples and things like that. So there you go. Fun one to take a look at there. We'll move on to new highs and new lows for the day. There we go. 61 new highs still. And a lot of those, this is S&P, and a lot of that was due to the morning, right? A lot of them finished off of their highs. Twitter was the only new low on the day. Did make a new low there at the end of the day, so I'll point that out, down 3% on the for just today, and getting worse for them. We'll see. I know you guys are passionate about your Twitter. But other than that, here's a great example of what the new highs list offered today. So it gives you a glimpse into, do you want to be an active buyer right now, or are you willing to sit back and wait and find maybe hopefully a discount? So we hit new highs on advanced auto parts. It ended up closing lower on the day. Look at some of the banks, right? They hit new highs. They're very extended in the really short term here, but they pulled back as well. There's Fifth Third Bank is one of them. Hewlett Packard hit new highs. Has been one of the more exciting areas recently because it's a slow, boring type stock, pays a small dividend. Everybody likes it. Same thing, but it did finish positive on the day. And Micron, I'll point that one out. Semiconductors hits new highs. Oh, yay, that's where money's supposed to go. Nope, psych. It's pulling back there. So that's what you have going on there with the new highs. Not much else to say and try to draw anything out from there, so we'll move on to stocks in the news. You got Beyond Meats. We talked about this yesterday. It's official. They're working with KFC. They're going to be, it's like a weird look green bucket. It's a meatless bucket of chicken. I haven't been there in forever. I never really liked it. Did you ever go there? KFC?
To KFC.
It was
no.
like,
no, I'm not a big KFC.
we had
guy.
KFC Boston Market kind of thing.
Yeah, KFC and the fish Long John Silver's.
Oh,
Taking this.
my grandma used to take me to Long John Silver's.
I remember Long John Silver's as a kid.
That's hard to do out here. We're in Florida. You want fish? It's right there. You know, that's a tough one. So I never, or Red Lobster. Never really went there. Anyways, you got Walmart. There. So apparently I didn't know this. They deliver groceries to you in your house if you want to. I didn't know that. Now they're expanding it to include 30 million total people. So I guess they just walk in your house and they put the stuff in your fridge and all of that. Why? What's the need for that? What are we chasing here? But that was the news today for them. Bed Bath & Beyond actually has earnings coming up tomorrow. Beats on earnings 63% of the time, revenue 52% of the time, and it's a coin flip. It's either up or down big, and you can see it if you look at the chart. So here's the last earnings, down big. The earnings before that, up big. Before that, down big. So it's a tough one to try to say, I'm interested in some kind of trade there. The stats aren't on your side, but they will report, and we'll likely be talking about it tomorrow. Garmin got the upgrade today. Deutsche Bank says it's a buy. They went to 160 on the price target. Remember, any analysts upgrades or downgrades with price target changes, they're essentially telling you that this is what they think the stock will do for the year 2022. They're up here, 160. That's about a 50% gain from the lows relative to the highs there. So good for them. I didn't read the whole thing. Sorry about that. Usually I read to see what they say. I did not today. Rivian. Hey, here's a $90 billion market cap company that loses $25 billion a year. But yeah, that's cool. They should be public. 11% loss on the day because Amazon is reducing risk a little bit. They're working with Stellantis on some Amazon cloud software, and they said, hey, we like Rivian still. We don't have a problem with it. We're actually investors in Rivian, not us, but Amazon. And no problem. We want to diversify a little bit. And so investors don't like that. They wanted them to work with them, and Rivian really needed them to be exclusive. It's not worth $90, but that's where it closed today. Other than that, you got ConAgra tomorrow reporting earnings. The best performer on earnings in terms of beat rates is going to be Walgreens. WBA is a ticker symbol. They report tomorrow morning. 86% of the time they beat on earnings. Other than that, Lamb Weston 75% of the time. Constellation Brands 77% of the time. Nothing too exciting to focus on there. And I'll answer your questions because I think I did it, right? I think I did it. I love it. Bought your first house at 20 and had a kid. I got that beat. Cody, how about you? Nope, not going down that route. The Bitcoiners are crying today. Yeah, I didn't mention that. Yeah, if you look at Bitcoin today, down 6%, breaking through this most recent range here. Those highs of 60 plus are looking long in the rearview mirror there. Where's the hedge? Again, I'll say it. The hedge is not working. Everybody that says it's a store of value, first of all, define that, right? Somebody define that to me when you say that. Everybody that says, I just thought I'd buy it, and I go, why? It's a store of value. And I go, okay, explain that, right? Just to be mean, and they can't. So, yeah, but down 6% on the day and likely moving a little bit more. Yeah. Do you ring the bell at Long John's? They have a bell?
Had great service. I think, right? If you had good service, you ring the bell on the way out.
I don't know.
Remember that?
I don't even remember.
Used to ring it all the time.
That's how old I was. I was just a kid. Like, it's weird. Grandma, why are we eating frozen fish? We just go catch it. Well, because we're in Iowa. We don't get real fish here. Oh, man. No, I did not ring any bells there. Micron, we talked about. Yeah, Rivian worth $30 a share. Yeah, maybe. You know what I mean? Like, no, it's not worth 90. I'm with you on that. I mean, it's certainly not worth 90. 30, if it got to 30 quick, okay, I'm with it. But I feel bad for people that fall for that. And sadly, that happened a lot. There was a ton of stocks like that last year. Yep. Hey, Harry. If the Fed really intends to aggressively slow economic growth, will cyclical value stocks be disproportionately impacted there? Well, we're already seeing some of it, right? So you're already seeing some of the money go, I get it. This is official. That's their minutes. Their meeting minutes came out today. They're not proposing this. They're saying we think that this is actually a path that we're going to follow. And they don't have a history of saying, we think this, we met, we talked, we agreed on this, but yet we're going to do something different. So I take that for their word, for the Fed. A lot of people like to pick on them, but when they say they're going to do something, they very much often do it very soon. The problem is we now have a 70% chance or something, 69, 68% chance of a rate hike in March, because the deal today was they were going to wrap up their purchases in early to mid-March, which means they'll meet a week later, if you're familiar with their meetings there. And so people go, uh-oh, we're going to have a rate hike in March. That's now the earliest, but they keep speeding things up. Right? If we keep seeing inflation hold up, which we got some numbers the other day that says it's starting to cool off a little bit, but if we keep showing this high inflation, what's to stop them from saying, we're going to go a little faster now? So I worry about that, which is what the feeling is in the market right now is, uh-oh, better move a little bit faster because that's potentially a month or two away. We're not talking like, hey, it's Thanksgiving and they want to slow in March. Remember, they were doing that back at Thanksgiving, saying maybe we'll speed it up to March. Well, now that's 2 months away. When you're going to speed up that fast, holy cow. Now we're talking a different language there. Let's get it going. Let's get a pullback now. Yeah, so we went over the Fed minutes there thing for you there. Dustin loves the red days. I love it there. You think CRM down more in the market? I would like it to. Yeah, so Salesforce had a pretty rough day today. Closed near the lows, if I remember right. So closed near the lows of the day. Think about this. I was telling a client about this. If it opens up tomorrow with the market, what's the pattern we've been seeing over the past couple days? Market, besides the Nasdaq, the market's basically okay. The Dow made new highs, but yet it fades in the afternoon. So if we open higher, why would you chase that, right? Given the current pattern of the market. I could be wrong and tomorrow could be just fine, but you really prefer for it to open lower if you could have your way. So I look at Salesforce, I say, well, I don't know that that's the absolute best price, but if I could have my way, I'd want it to open lower tomorrow, start the day weak. That'd get me more excited to start playing around with it. Yeah. Tim, what's your look at the I bonds? I get that question a lot. Federally taxable, right? They reset twice a year and you're playing into an extended inflation count. So likely you're going to reset a little bit lower. And so for that reason, if it's already federally taxable as income, then why not just use an ETF, right? Get the same or even higher total yield and pay your tax and be on your way. Plus you can only buy, 10,000 of it? You can't buy much more than that, I think, a year. If I remember right. Yep. I think dividend ETFs, you're already starting to see them wake up. Yeah. Mm-hmm. KFC's in New Zealand? Huh. All right. Is it different food or is it, I mean, it's got to be the same thing, right? Guess it's got to be the same thing. What do you do? Is it KFC's KFC? Where do you start dabbling with Roku and SQM? Wherever you like. So China is basically 80% of all lithium. Chile, believe it or not, is one of the bigger players there as well, and that's one of those Chilean lithium companies that I like. Did I miss a CES question? Sorry. I missed something there. You don't think inflation's stopping? I think we're not likely to continue it. I think the pace of inflation is transitory. How about that? But inflation itself, yes, it's likely going to remain high. I love it. Everybody's got an EV car, man. Jeez. You think cybersecurity, like CrowdStrike, will be buying opportunities with all the hacks? I've been hearing more and more about that just from clients around there, people getting hacked or compromised. I woke up this morning thinking I was hacked. I was looking at our business card and I thought someone was buying stuff there. CrowdStrike it currently continues to fall. No hurry here, right? The technical traders are all going to look right here, basically where the cursor landed, about 172. But your timing that with broad market weakness, especially in the Nasdaq. So if that continues to get weaker and we make this series of lower highs, I really say there's no hurry to be in CrowdStrike. Myself personally, we can make it one of those that we look at each day for you, though. He's selling that taxable account to buy a family vacation home at a beach. Oh, man. That's a tough time to be taking that kind of risk. I hope you're not like pending closing or anything. Update on managing the outside accounts. Hopefully any day. We're waiting on the final agreement, final addendum. We have to have an addendum to the agreement to say now you will let us do this. And the wording has to be approved and everything. So everything's in the right hands. We're just sitting back twiddling our thumbs waiting for the thumbs up, which one day I'll explain it, but you actually don't get a thumbs up, which is the weird part. You get silence. If you submit something and you get silence, that means it's good. So you're supposed to interpret that. It's weird. Yeah. Oh, no, I'm bringing transitory back, man. Transitory is back. That's the new drinking game. Yeah. You think Ford's going to... I think Ford's in the best position. Don't knock out Toyota, by the way. Toyota's got a lot of money behind them, and Toyota's got a different strategy than Ford. But you will not see the same rate of gains in Ford. I don't see it. I think they'll do well. Everything's going to be fine. But no, not like Tesla there. No. I do not see that. I see a good year for them, and that's about it. It's a fun one to put in the research site, by the way. Hey, how often does Ford make these kind of moves? Almost never. So I like to play with it, and I hope you like it too. All right. I'm going to wrap it up there. I've done my job for the day, but I'll be back tomorrow to do it all over again. Appreciate you guys hanging out with us. Enjoy it, and I'll see you tomorrow. Adios.